Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We like to discuss what's impacting mortgage rates on any given day. Kind of go into what's on the economic calendar, the geopolitical or headline news, or combination that might be impacting rates. And sometimes the sentiment in the market changes. Sometimes good news is now bad news, and vice versa, which can be a little confusing for a lot of people. And we try to get into explain what's going on and why it's happening. A little bit about myself is I'm a loan officer. I do work with a national lender. We do loans in all 50 states. We'd love to be able to talk to you about your personal needs. If you're looking to buy or refinance, we'd love to be able to talk to you. But furthermore, we like to be a little bit more. We like to be a resource. So if you have questions about anything, please reach out. We are here to answer or try to get the information you're looking for. And so let's start with by looking at the economic calendar today. We do got a few items here. We got the HPI by two different groups. The first one will be HPI standing for Home Price Index. The first one is by the Case-Shiller Home Prices. These are gauges the 20 largest markets. So on a month over month, this is for month of January. So in month over month, December was revised slightly lower from 1.5 to 1.4. Forecast is kind of the same path of 1.5%, and it came in much higher at 1.8%. Now its year over year went from 18.6, with the forecast showing it slightly dipped to 18.4. It went upwards to 19.1. So we had a half a percent increase in the home appreciation at the end by January here. Now we also got the FHFA home prices. This is the homes that have conforming loans with them, and across the U.S. So its month over month was revised in December from 1.2 to 1.3%, and like its counterpart, it jumped up in January to 1.6%. So its year over year was revised in December from 17.6% to 17.7%, and it jumped up like its counterpart about a half a percent to 18.2%. So very well, very nice that we're seeing this across the country, that we're seeing a pretty big increase. However, we're not going to be able to see that sustainable. Now, it'll be interesting to see these coming up. This was for January. If you recall, January was kind of the big month where we started seeing a big spike in rates, and it's been continuing all the way through until this month until present. And we'll be interested to see how much of an impact we'll see on those in the coming months here. Now, last but not least, we got the consumer confidence for the month of March. We had 110 in February, but that was revised much lower. If you look at this, that's a pretty big drop here from 110.5 to down to 105.7. So the forecast come for 107, and it came at 107.2. So instead of going downwards, it's showing it upwards. That consumer confidence went upwards. So which is kind of a little funny there, but in any case, that's what the report is showing. Now later today, we do got a 7-year note auction. This could have some impact with the market here too, or at least with mortgage-backed securities. We have found that the 5, 7, and 10, and of course the 30-year bond all have impacts. So anything from 5-year on up having impact. Now yesterday it did help slightly. We had the 5-year note coming up after we had done our video. It did have a little bit of impact. It did increase a little bit further, but it did by towards the end of the day it did subside quite a bit. So we did have a spike up to like 17 basis points, and when we did our video, I think it was around up 5 basis points, and then it pulled back, closing only up 9 basis points. But today, however, as you can see here, we actually started lower of the day here. What had happened is headline news here, or geopolitical, I guess for that matter, is there's talk about peace talks, that there might be progress towards peace talks between Ukraine and Russia. Looks like there's some face-to-face done between the two. Russia also said that they would pull back a bit from Kiev and I think another city in that region area, that they would scale back. Russia would scale back its troops, or at least its activity in those areas. So it leads that there might be some progress towards peace. Now, why is that important? Well, I mean, if you recall before that, everything started spiking, inflationary numbers, and then there's also talk about possible food shortages. So we still have some time that we could hopefully work our way through it, but the price per barrel of oil dropped below $100 from like 107 to now just under $100. But we also got a lot of important things from like wheat coming out of Ukraine, which is a big producer. And then out of Russia, we also got soil, which a lot of our farmers use that we pull from Russia, which in there. So if our farmers cannot produce because they don't have soil, that's going to hurt our domestic production here in the U.S. as well, and that in itself could also create more of a food shortage here in the U.S., which would not be obviously a very good thing, and would probably leave a lot of people very disgruntled. So, um, in any regards, this is good news. Hope and the markets are reacting positively to this. From mortgage-backed securities are reacting positively to stock markets acting positively behind it. And as you can see here, this is what pretty much came up, and we kind of jumped up, spiking after the news came out. It kind of went down a little bit, but kind of pulled back a little bit as well. So, uh, so most part, day's been looking pretty good for mortgage-backed securities, and it's certainly helping with our pricing. So mortgage rates are a little bit better today than what we saw yesterday and Friday, which is the good news here. Now, last but not least, we'll touch on what's the average rate here on a conforming loan limit. They also have points built into it. So 30-year, again, is at 4.95, and then we got the 15-year at 4.23%. So this is kind of roughly where we are. This is kind of not to be taken with a grain of salt, just kind of like more of a basis point of view, primarily because every person's rate quote might be a little bit different, as there's a lot of variables go into it. If you like a rate quote, please feel free to reach out. We are here to help assist. We can provide that for you. If you guys need any questions for anything, please reach out. We are here to answer, or at least try to get the information that you're seeking. We do thank you guys very much for your views. If you guys like these videos, please help us out and smash that like button and sign up. Join us and subscribe and share us. We greatly appreciate you folks. You guys have a great rest of your day. Thanks so much for watching. Look forward to see you guys in tomorrow's video. Bye-bye.